you're the developer, you're the visionary, but I have to imagine that even you can't ignore the price collapse that we're witnessing in crypto. Are you paying attention? Do you care?
Price collapse. It's kind of funny. So this is something that we've seen so many times in the blockchain ecosystem since essentially 2009 when Bitcoin was invented. We've seen rises and falls. We've seen what many call bubbles, and I would agree.
What happened last year was a bubble.
We've seen 6 big bubbles, each more epic than the previous one. Each of these bubbles are astonishing when they're happening, but when you look back, they seem like little pimples on a chart, really, because the growth has been exponential. Each of these bubbles has the advantage of bringing attention into our ecosystem. It brings entrepreneurs, it brings developers, it brings money, it brings the prospect of building fundamental infrastructure and creating more value. So what we have noticed is that with each of these bubbles, we have a tremendous surge of activity, and that's what we're seeing right now. So we had a big bubble. I think we're now back to something like November, December prices, which we thought were incredibly high. And since then, we've probably seen 2 orders of magnitude increase in developer activity, increase in scalability technology. So it's actually going quite well.
Does it worry you at all that the developers, the entrepreneurs, the talent, and the money that enters the crypto ecosystem on the way up exits on the way down?
No, we're not seeing that. So we see trader types feel like their fortunes are rising and falling with the price of Bitcoin and the price of Ether. And really all these tokens are incredibly correlated. So it's really the trader types that are moving them around. But
don't you feel it too?
Not so much.
On paper, surely. You know, when Ether's at 1,300, you're a much wealthier man than you are today, even though you remain.
Sure. So we can look at the price and we can make growth plans and projections, and we're still on track, basically. So this is not unexpected, and we do feel it. We feel the exponential increase in activity in our ecosystem. It is overwhelming what's going on in terms of our different product projects, in terms of new scalability technologies, new teams, projects, developers that are entering our ecosystem, new large companies that are that have gotten comfortable with our ecosystem.
Is this just going to turn into another bubble? If we've seen 6 already,
absolutely, yeah. Yeah, so
where the price it reaches is that much higher than the last?
So the thing about the internet, the .com bubble, is that things were so slow back then that there was sort of one rise and then
one collapse.
One collapse and a steady growth over time.
Mm-hmm.
Things are moving so fast. The rate of development is so quick right now that we can, building on these technologies, we can see a quick rise and then we see a correction because there's this fear and greed cycle. People rushing in because they see the promise of the technology. But then we build more fundamental infrastructure, we see a correction, and then the potential gets even more impressive. So I absolutely expect that there is a strong correlation between the rise in price and the growth of fundamental infrastructure in the ecosystem and the growth of development in the ecosystem. We are probably 2 orders of magnitude bigger as a developer community than we were 8 or 10 months ago. And so that's going to be astonishing.
It'll fuel the price again.
Yeah, we're seeing many different layer 2 technologies, which are built on the layer 1 trust layer. These layer 2 technologies are going to enable exchanges and games to have hundreds and thousands of transactions per second, and a bunch of those are going to be released this year.
This is precisely what I wanted to talk about right now. Yep. You talk about layer 2, if I understand it correctly, what you're really talking about is the challenge that crypto has faced up until now, which is scalability.
Yeah, sure.
You believe that the scalability problem is going to be solved this year?
So the scalability problem is never solved. For decades, software developers have been bumping up against scalability problems. We're always
hardware developers too.
Yeah, hardware. Yeah, we're always trying to max out the available technology. On the web, the internet, the web, we have achieved tremendous scalability in terms of transactions per second. But then we've actually thrown a lot of that away with this new blockchain approach to building a decentralized World Wide Web. We've thrown that away. We're down to like 20 transactions per second, but that is in a trust infrastructure. It's an infrastructure that automates trust, it guarantees execution, and that's a much better foundation on which to build the next surge in scalability.
Right, but the trust layer, is not fast enough. 20 transactions a second is not fast enough to compete with, say, a legacy payment system.
So that's correct.
So how long, I guess, is it this year, or is it next year, or is it 2020, or whatever, when we see a crypto architecture that can begin to replace the things that we deal with now and that still cost us money, right? Where there's still friction in the system.
Yeah, so we're ending phase one of the blockchain epic, let's call it. Phase one has all transactions processed by all the nodes of these networks, and you get trust from the radical decentralization. We're entering phase two, where we add a layer 2 set of technologies. There's about 20 different projects ongoing that will add hundreds, thousands, tens of thousands of transactions per second to the Ethereum ecosystem. And what happens there is you stand up a blockchain system, it subserves a game or a set of games or an exchange or something like that. You link it into a smart contract on Ethereum, it gets the full trust that it needs from layer 1, and you can go ahead and do high transaction throughput in layer 2.
Joe, what happens if other protocols that trade speed for centralization, or speed or centralization, I guess, for security is really the issue here, gain adherence in the interim between now and then? I'm thinking about Ripple, for example, or I'm thinking about EOS.
So Ripple isn't really a blockchain technology, it's a sort of a payment system. So I don't really consider that a competitor.
So let's say EOS, for argument's sake.
EOS is a slightly, maybe slightly decentralized approach at building a blockchain system. We are moving into a world where we're going to have liquid deep markets for many different kinds of crypto assets. Crypto commodities, equities, bonds, cryptocurrencies. In that world, you need a very decentralized trust layer. If you have, as your trust layer, 21 people who know one another, who regularly confer with one another, who can't govern their situation, and who are fighting, I know.
So this is all geek speak for the death of EOS?
No, I don't think. EOS is a sort of interesting technology, but it's incredibly dangerous to treat it as a layer 1 technology. It's a good layer 2 technology. If you link EOS in to a smart contract on Ethereum, you get the full security of the Ethereum network. All of the tokens in your layer 2 technology are protected by layer 1. If something goes wrong at layer 2, people take their money out and it's perfectly safe at layer 1.
Do you see a future, Joe, in which all of these competing coins survive? Or will it be, say, a duopoly, like, Apple's iOS and Alphabet's Android? And will Ethereum be one of those?
So it's not all that will survive. I think the future of the decentralized World Wide Web is hundreds or thousands of decentralized protocols. Some of them will be like Ethereum, and Ethereum its orders of magnitude bigger than anything else, and it's growing faster than everything else, so it will be significant going forward.
A survivor, in other words?
Oh, absolutely, yeah. But we'll have trusted transactions, automated agreements, smart software objects on Ethereum and networks like Ethereum. We'll have decentralized storage, decentralized bandwidth, decentralized heavy compute, and many other protocols that are interoperable with one another, and that's being built out right now.
Let me talk to you about Consensys. Do you really have 1,100 employees?
Yes.
What are they all doing?
Blockchain.
Besides scaling, what are your top priorities?
So we have a product focus. We have an enterprise, government, and central bank consulting focus. We have an education focus, and we do capital markets activities. We build lots of the infrastructure for the Ethereum ecosystem. Ethereum processes about 1 million transactions per day. It's about 80% of all the blockchain transactions in the world. But those are just writes against the Ethereum world computer. That's when a transaction happens, some data changes. But when you write an application, you need lots of reads and lots of other queries. So we've actually built infrastructure that processes about 9 or 10 billion queries per day, which is twice what Google processes.
Boy, may I ask, what does it cost to run an enterprise like that?
A fair amount.
No, but are we talking about tens, hundreds of millions of dollars a year?
So last year we were under 100 million, yeah.
And this year you'll be where?
Bigger.
Clearly.
TBD.
And here's the question. You mentioned the fact that you have a consulting business.
Yeah.
You advise corporations. You advise governments. Where specifically do you see meaningful progress on adoption? Any particular industries, any particular countries, any particular companies that you want to point to?
Yeah, massive adoption everywhere. So banking industry, supply chain is huge. There's one prong which is sort of corporate, and another prong which is building out the decentralized World Wide Web. Both are growing tremendously. The startup ecosystem is exploding. We're building a platform for sustainable ethical journalism, a platform for an adjacent music industry where artists can connect directly to their fans, building supply chain platform.
Can you put a percentage on the speed of growth?
Percentage, no, but this is what it feels like to be living in exponential times.